Welcome back, and joining us to put the day's markets into perspective is Craig Pheiffer from Sasfin Wealth. Thank you so much for your time, Craig. We've had quite a lot of trading updates today. It seems that the year is going so fast because we know that as soon as all these trading statements come, then it's going to be results season. But let's actually start off with Karoo because they have their results season every quarter. They came out with their third quarter results today, saying that the top line increased by 16%, cash generated from operating activities up 55%. But they did have some sort of hit to their bottom line because of Kazuka. But the numbers were still well received by the market. We did see that share price climbing over 5%. So what did you take out of Karoo's report?
Yes, I think this game with Cartrack and the like is all about subscribers and getting that base to generate that ongoing cash flow from subscriptions. So I think that's what the market liked. Good mid-teen growth in subscriber numbers. The pace of increase in subscriber growth slowed a bit in the third quarter. These were their third quarter numbers. But overall, as you say, a good story and continuing to build that base of subscribers.
All right. Quite an interesting point that you make there because the model is based on subscribers, and as long as you have that subscriber base, then of course you can build on a growth there. Let's go into AVI. It released its interim trading update today. Even in a tough economic environment, it says that revenue grew over 7%. Most of AVI's units did have growth in their revenue except for I&J. And yes. And what else is it? The personal care business.
Yes, that's
exactly. Yeah. So we did see the markets actually liking this because the share price did surge over 7%, saying that they expect their bottom line to grow by as much as 18%, with good reason.
Yes, good upper teen growth in earnings. This update was really about the different divisions, showing you what sales growth they had, but they also discussed the extent to which they could recover costs across their different business units. They managed that in most, but quite with inflation as it was, a lot of cost pressures coming through. Some businesses they weren't able to recover fully all of those costs, but overall, fairly good top line growth, but then with that improved margins and efficiencies, that's translating into that earnings growth.
Yeah.
Unfortunately, the I&J story just shows you our own domestic failings and that was really a story of not being able to export from the ports in Cape Town.
Yeah.
They had the taxi strike in Cape Town as well, so they lost all of their December export sales. On top of poor catches as well. You can never tell what you're going to catch at the end of the day. But that was the only kind of real big downside to the numbers.
Yeah.
But overall positive, and the market did respond positively.
That's the thing. That fishing business is quite tricky because it's not just with I&J, it's also with Oceana and all these fishing counters where it's never just consistently good performances there. As we're talking about AVI and them struggling with the personal care business, and actually this is nothing new because even Lipstar has that personal care business that they've been trying to kind of let go of, but not managing to. Clicks. They have personal care, and they've actually been saying that they managed to gain some market share there. Of course, they released a 20-week trading update there, saying group turnover rose 8%. We did see that stock up 2%. So, seeming that all the people are just buying personal care from Clicks. What did you think of that?
Well, I think the business is a bit more than just that, but across their categories as well, and on the retail side, doing extremely well. I think the poor side in these numbers was the UPD, the pharmacy distribution at a wholesale level that they do for other clients as well. But in terms of the retail side, they had their best day ever in terms of sales on the 22nd of December. And that whole week before Christmas was their best ever turnover week. So doing something right there at Clicks for sure. And the issues on the UPD side, on the distribution side, a bit of systems issues that have been ironed out and are part of history now. That's been fixed. And also concentrating on their their bigger margin clients,
yeah.
and just being more efficient in who they deal with.
Yeah.
So I think the market liked that, and just the way forward for them, just Clicks doing it right again.
I mean, listen, I get it. That 22nd of December, lots of people got paid, and everybody's trying to get their makeup and personal care products for the Christmas period. So I get it. I get it.
That was the Friday before the weekend.
Exactly.
Christmas on the Monday.
Yeah. Let's move on to Building Materials Group Cash Build. It released its operational update today. So saying that revenue for the second quarter was up 5%. That's this quarter compared to the previous comparative quarter, and then taking into account the interim period, the half year, that revenue grew 2% compared to the previous comparative one. We did see that share price slumping 3%. Of course, nothing new when it comes to investor reaction on Cash Build. Is the Cash Build at this point just trading with no real growth?
It's a tough environment out there. They did have their heyday. Particularly during those COVID times where people were, looking to do home improvements more than, buy new houses and the like. So I won't say those days won't come back, but currently it's just a very tough economic environment. And, that kind of discretionary spend, maybe you hold off on tiling your bathroom again, maybe just live with those horrible pink tiles for another 6 months or so. But it's they just haven't seen the turnover. So 2% growth is kind of it's not even mediocre. It's quite low, and the market's just acknowledging that.
Yeah. All right. Well, let's get to your stock pick for today, Craig. What have you picked?
One of the Magnificent Seven. A lot of, most of those seven have had a fantastic ride last year. But if you look back to the year before, a lot of them had a terrible ride. One forgets that NVIDIA was down 50% before it did 200% last year, and still up 20% today. But my stock pick, one of those is Meta. Also a fantastic year last year. But I think the market's starting to accept the push into the metaverse. That was their downfall, really. They spent a huge amount of money, a lot of their cash flows from Facebook, Instagram, WhatsApp, going into developing the metaverse, and no one really understood what it was about. But now we're starting to see, all the developments in the metaverse coming out, goggles, and everybody wants to have, this vision wear that does all these snazzy things, augmented reality, and they're probably going to lead that space. And it's probably not too far down the road before we move away from our keyboards and start doing these things with our eyes and our heads. And they've got those Ray-Bans now that, are kind of like also, you see things like a Mirage Pilot, or an F-18 Pilot's goggles. It's just amazing what they can do. But I think overall, you still need to generate the cash. They've got those 3 businesses already with over 1 billion users in each. Great cash flow, and they're going to come out with these new products. And I think we'll see the cash flow continue to grow, and just see where this new exciting world takes us, as well as the AI that they've got their own version of GPT in Llama. So I think there's still exciting things to come, still growth opportunities. It still fits in that growth quality stock model that we like.
All right. Well, in the meantime, we'll be gathering our coins for those Ray-Bans. Thank you so much for your time and for your insights today, Craig. That was Craig Pheiffer from Sasfin Wealth.